Hello, guys, and welcome to Forex Success. As you all know, this is a group of expert traders who have come together to provide you with the best strategy to make money trading synthetic indices. So, guys, welcome today. If you're new to this channel, guys, make sure you hit that red subscribe button and turn on the notification bell because it's very important so that you'll be notified each time we drop a new video. So thanks guys for clicking on this video and make sure to give this video a thumbs up. So guys, today I'm going to show you something very great, like trading step index. Guys, trading step index is very profitable. Like you can make money massively trading step index, but with this simple strategy I'm going to show you now, guys, you are going to make a lot of money from step index. So guys, let's get started. Trading step index is super simple. It's super simple, guys. I'm going to show you how to do it. Guys, make sure you watch this video from the beginning to the end so you won't miss out any part. Don't skip this video, guys. Follow the video attentively, and guys, I promise you, you will start seeing the result. To the glory of God, you will all make money from it, just as I'm making now. And a lot of you, I know you are already benefiting from this strategy. So guys, let's get started. Okay, trading step index. Okay, so guys, first of all, this strategy, it works really well. So guys, now I'm going to show you how to set the indicators for this strategy. So guys, watch this attentively. Okay, so the first indicator we'll need is the moving average. Yes guys, the moving average. Okay, you click on the moving average, the period 3, you click period 3, shift 0, the method exponential, apply to close, then the star is 3 pixel. You can use let's use yellow. Okay, you click done. You see that, guys? So the next indicator we'll need is the moving average. You click on the indicator again, click on moving average, done. So the moving average, guys, we are going to use period 60, then the shift 0. Yes guys, use shift 0, then the method will use simple, apply to close, then the style will use 3 pixel. This time let's use green. Okay, you can see this strategy, guys. We're using green right now, so you click done. So the next indicator right now, it's going to be another moving average. Yeah, moving average. So the period for this moving average should be period 7, shift 0, the method simple, apply to close, just as you see on my screen. Then we're using 2 pixel, guys, 2 pixel. For the colors, let's take red, then you click done. You can see we still have more indicators. So guys, the next indicator we'll need is the stochastic oscillator. So you click on the indicator tab, click on add, you search for your stochastic oscillator. Yeah, I've got in mind. So these are the parameters: the K period 1, the D period 1, the slowing 1, price feed low/high, just as you can see on my screen, the method simple, the size should be 1 pixel for the main and signal. Guys, use the color of your screen. If your screen is black, use black. So my screen is white, that's why I'm using white. For the levels are 20, 80 and 50. 20, 80 and 50. Guys, this is how to add your levels. Let me delete mine so I'll show you how to add it. You click on the add button again and again. Since you're adding 3, the first one should be your 20, then the second one your 50, and the third one your 80. So you go back and you click done. So guys, it's done. So this is the function of the substantive oscillator, just to give us the overbought and the oversold level and the midpoint. You can see, guys. So the next indicator we'll need right now, guys. So you click on the next indicator. So we'll add the Ichimoku. Ichimoku on indicator window 1. You can see you have at this point, this is the main chart. So all indicators added here, it's going to be on the main chart, but the ones added here will be on the indicator window 1, that's beneath the screen, which is below the chart. So guys, click on add on the indicator window 1 and search for your Ichimoku. You can see, so Ichimoku, the parameters, you can see them here. For the taken, it's this 9, you use 9, 26 and 52, just as you see on my screen. Then the size is 4 pixel for the first one. You can use your color, ever color. I'm using blue. So the rest, 1 pixel, 1 pixel, 1 pixel. You can see 1 pixel. Use the color of your screen. That's all for the Ichimoku. You click done. The last indicator we'll need is the moving average, but this time it should be on indicator window 1. You click on add. You select moving average for the indicator window 1, guys. So the period for this moving average is going to be period 3, shift 0, method exponential applied to previous indicator data, and then the star will use 3 pixel. Then let's take red for the color. Then you click done. Okay guys, we finally done setting the indicators. So guys, this is what to watch out for. Look at the chart. This is 1 minute time frame. My zoom level, it's the 3rd zoom level. Let me show you how to zoom. This is how to zoom. This is the 4th zoom level. Right now you are seeing. This is the 2nd zoom level, as you can see on my screen. The 2nd zoom level, then the 3rd, the 4th and the 5th. You can see that, guys. So this is the 1st. We're using the 3rd zoom level, the 2nd and the 3rd. So guys, this is what we are using for this strategy. Guys, please pay attention to this strategy. It works. It works, guys. It works, and we are making money from this. Look, okay, for this strategy, 3 conditions need to be met before you can place a trade. 3 conditions, just 3 conditions. 1, guys, you see this green moving average. The green moving average has to cross below this green line, this red line. I'll come again. This green moving average, it have to cross below the chart. it has to cross below the chart for it to give us a buy. That is not all. It has to cross below the chart for it to signal a buy below the chart and everything going with the chart. The green moving average has to cross below for it to indicate a buy. That is the first condition. Then the second condition is that this line, this moving average, which is this red moving average, you can see they move together. It has to be at the oversold level before you can place a buy. Guys, enter only short trades. Derive synthetic indices is 24/7, so you can trade as many times as you want. Just wait for perfect entries, perfect signals, guys, before you enter. You can see it crossed below, and when it's at the oversold level, it buys. And then when this red moving average crosses below the yellow moving average, it indicates a buy. You can see the three conditions. First, the green moving average has to cross below the chart to indicate a buy. This red moving average has to cross below the yellow moving average to indicate a buy. And this this moving average has to be on the oversold level for you to have a short trade. Guys, this strategy is the best. It is the best. Yeah. Okay, guys, we got a signal here. Look at the short one. First of all, it crossed. Look, it crossed at the overbought level. You can see it. So guys, this moving average, red moving average, crossed above at the overbought level. You can see. Then the red moving average crossed above. You can see the conditions, guys. Then the red moving average crossed above. Yeah, crossed above the yellow, and it's at the overbought level. Look, yeah, it's at the overbought level. So you can take this market and make some money from it. So the whole condition was completed at of this point. Yeah. So you could have took this market and make some money from here eventually to this point for the 5 minutes, for the 1 minute time frame. Yeah. So guys, you can see this also. It crossed above. This condition was met. It was met, and then look, the green crossed above the red. Crossed above the red. You can see, guys, this is what I call a short trade. It's above it's at the overbought level, and the green moving average crossed above the red moving average, crossed above the chart, and the red moving average above. So guys, just imagine you were sitting and watching this market. Then this condition, the red moving average crossing above the yellow moving average, you saw it and you were waiting, and you saw it at the overbought level and you were waiting. The moment you see it just crossed, guys, you enter this market, you would have made something from here up to this point. This is step index. Usual is pullback is common. It's usually common to have pullbacks. Look, you make something from here to this point. You make something from there. Look. So guys, you can take your profit at the 50 level. The moment this moving average gets to this 50 level, you can take your profit, and you can decide to leave it down to this 20 before you take profit. Look, it's a matter of choice, but me personally, I take mine from the 50. So from here to this point, it's okay for me. To this point, yeah, to this point. It's still not up to 50. It made a pullback, then it continued. Look, so this is my 50. So I got from here down to here. Guys, you can see this money made it from there to there. Look, so this is what I'm talking about. It finally reached the zero level, the oversold level. Guys, if you hold the trade to the oversold level, take your profit and leave the market. You see, the reason why many traders lose money is because of greed. They want to continue making. Guys, as you make that profit, you leave the market and wait for another short trade. Even as you get to this point, you can still make it from here again. Yeah. No, the condition wasn't met because it crossed below, indicating a buy. Yeah, guys, it crossed below, indicating a buy, but this is for the, look what I'm saying. This is why you have to watch out for the TV condition. Look, the green moving average crossed below, indicating a buy. The red crossed below the yellow, indicating a buy. But look, it's at the overbought level, not even at the oversold. Guys, don't enter this market or you lose your money. The market will kill you if you enter at that point. So guys, look, for this is a short trade. It crossed above. Yeah, it crossed above at this point, and it's at the overbought level. You can see it's at the overbought level. Look at the point where it crossed above. It's at the overbought level. Guys, this is what I call a sweet trade, guys. As it crossed above, you enter this market from here. Guys, you start making to this point, which is the 50. I can take my profit off this market from here. I can decide to say, okay, I'm keeping it. I saw this pullback, I'm cool. Then it continued because it's usually pullback. It's common in stepindex, very very common. So you keep it again. It says continuously, guys, down to your 50, down to your 50s. Look, it's sold. You can, guys, this strategy is the best. Then finally it gets to 0, then you run. It gets to 20, then you run off the market. Guys, this strategy is the best. Then you run off the market because you've made profit. You see, guys, this is how this strategy is so sweet to use. Look, then you saw it again, it crossed below, but it's not at the oversold level, so you can't enter. You ignore it. It's a trap. Don't enter. Enter only short trades, guys. Only short trades, only short markets. Look at this one, this point. It crossed above, but it's not at the oversold level. It's not at the overbought level, so you don't enter. You don't enter, guys. Please don't lose your money by entering trade that are not sure. Look, it crossed below. You can see, and it's at the oversold level. You can see it, guys, at the oversold level. Yeah, so this is sure. You enter at this point, you make it up to this level. 50 point per 50, you can take your profit. You can continue till it gets to 0. Yeah, so that's it, guys. You make it up to this point from here to here, guys. Check it out. Very simple strategy. Very very simple strategy. Look, it crossed above and it's still selling. It's still selling, guys. Look, it's still selling. Stepindex is going to sell. I want to see for the 5-minute time frame, guys. Also on 5-minute, it also work. Look, it crossed above at the overbought level and it's still selling. You can see it's still selling. Crossed above at the overbought and it's still selling down to 0. gone to the 0 level. Yeah, so guys, it's a very good strategy to use. It's a very good strategy to use. Step in this, it's still selling. You can see 1 minute. So the moment I see this condition, guys, if I was here, see this here, so I would have entered this market, and maybe at this point, because I have to wait for all the conditions, the green moving average crossed above and the red crossed above also, and it's at the overbought level. Guys, it says, so I just want to show you one more condition, one this time for the overbought. Look, it crossed above and it's at the overbought level. Yeah, you can see, guys, it crossed above at the overbought level. Look, it sold, it reached the 50 level. It usually makes it pull back at the 50. Yeah, it usually make it pull back at the 50. That's why I prefer taking my profit at 50. So then it pull back, then it continue down to 0. Yeah, so guys, it's not all the time that it gets to this 20. So that's why, to be safe, I just take my profit from 50. You see, guys, so this is stepindex, and this is how to trade stepindex. You add the knowledge of price action to this, guys, nothing can stop you anymore. Nothing. It crossed above. Look, it sold massively. Look, good entry, good signals, cross above, it sold continuously. Guys, this strategy is a boom. Anywhere that the condition is met, guys, it's always successful. It's always successful. That's why we have Forex Success, guys. We bring only successful strategy for you. Yeah, only successful strategy. Guys, turn on the notification. You're going to get the strategy for this volatility 75, the killer strategy for volatility 75. Guys, look at this point. Oversold level. Yeah, at the oversold level, crossed below the red, crossed the yellow moving average. Look at the buy. Guys, the secret behind this, it's obedience. Obey the conditions. Exactly, obey the rules of this strategy. Guys, you cannot lose from it. Obey the rules of this strategy, and make sure you take your profit in due time. Don't wait for it, because this is not price action that you have to wait for. This is indicators. So take your profit in due time, because reversal is very, very possible at any given time. Yeah, reversal is possible at any given time. So guys, take your profit and make more money for yourself. Thank you, guys, and make sure you give this video a thumbs up and turn on the notification bell so you'll be notified for more videos, and stay tuned for volatility 75 in the strategy. Thank you all, guys.